welcome to Trading Nation. I'm Mike Santoli. Investors are looking for clues as to what the midterm election could mean for the markets and the economy. For more on that, let's bring in Yale economics professor Robert Shiller. Professor Shiller, great to have you here. It's interesting. It strikes me that in this particular midterm election cycle, there is a tremendous amount of focus on the patterns that have been displayed by the past and other midterm cycles, and everyone seems to think it's going to be bullish just by essentially passing by tomorrow. What do you think this midterm election could mean, how it reflects what's going on in the markets and the economy?
This is a very different midterm election. It's really a presidential confidence vote. So I don't know that it's also a rather intense time. There's a lot of anxiety at this point, a lot of anger. I don't think that this is easily grouped into past midterm elections, so I think that the history of the market responses to that is not really, doesn't tell us very much.
And so you say that this is almost, a more intense, perhaps emotional midterm election. What are the implications of that if we're looking to try and see what the response to it might be, how the markets and the economy might react down the road?
Well, the market is almost unforecastable over short intervals of time.
Sure.
And that's because it's not just the level of emotions, it's the overall narrative that goes along with it. One thing that is somewhat reassuring is I have what I call a buy on dips confidence index, which I base on questionnaire surveys. And the index asks you, if the stock market were to drop 3% tomorrow, what do you think it would do the next day? And I compute a confidence that buying on dips is a good thing. And in recent months, we've had strong confidence. We saw two major drops in the stock in January, February, and then in October. And both times the market, it had something like a 10% drop, but it recovered somewhat. So I'm not, it's not, even if the election is very disturbing, it doesn't tell us that something dramatic is going to happen in the stock market.
Sure. No, I mean, clearly the sort of muscle memory is there. Investors stand ready to try and buy those dips. I assume that's because with all of the political noise, people keep pointing to the fact that the observable U.S. economy, all the metrics seem like they're lining up correctly. I mean, is that the main narrative that you think is in control of investors' minds at the moment?
Yeah, I think that it's partly the Trump narrative. He promised to make America great again, and the economy is growing. In the second quarter it was 4.2%, which is pretty good. It's not as outrageously good as some people would have you believe, but it looks solid. Earnings growth has been good, and people take that as a sign that they should raise the price on the market. Actually, I think they overreact to these pieces of information. But everything is okay now, except for the emotions that we have about political polarization, and we're upset by recent events like the synagogue shooting has us on edge. It makes maybe the risk of some big change happening greater, but it doesn't make the market very predictable.
No, certainly not. And just quickly on the Fed, because it does seem as if people are sensitive to any signals that the economy is later on in the cycle and that the Fed might hasten its end. And now we have the president kind of publicly opposing Fed policy. Is that an issue?
It's definitely an issue. Yeah, that's part of the general anxiety, the polarization. We have the president arguing against the Fed. That's part of the whole new world we live in. That didn't used to happen. And the other thing is that we're coming out of a very low interest rate regime that we've never really seen before, except possibly you could say in the Great Depression. So we don't know what to expect. And as people see this new regime come hitting them, it might create an awakening at some point, and that could correct markets. But on the other hand, Powell has been, like Yellen, has been very responsible and level-headed. I don't see that it's a major source of concern.
All right, Professor Shiller, thank you very much. It's understandable people are on edge with all these issues, but for right now, the markets hold together. Thank you very much for joining us, and thank you for watching Trading Nation. I'm Mike Santoli. We'll see you next time.